trading near $65 per barrel mark, and gold continues to shine. Kanishka, thanks so much for joining us with that update. But let's keep it going then with oil then, and global oil markets is something that we'll focus on. OPEC Plus is once again in the spotlight as it weighs the possibility of a fresh production increase, one that could flood the market in an already oversupplied market. Reports now indicate that the group discussed a potential hike of 411,000 barrels per day from the month of July. However, delegates say no final decision has been taken so far. This comes at a time when crude oil prices are under pressure. Remember, Brent crude is now down nearly 14% this year so far, with concerns around weakening demand and the growing risk of a supply glut. All eyes are now on the next OPEC Plus meeting as the group tries to strike a balance between market stability and geopolitical strategy. To discuss this and the long-term implication of transition from fossil fuel to renewable energy, we now have Mr. Pulkit Agarwal, Head of India Content Cross Commodities from S&P Global Commodity Insights, now joining us. Mr. Agarwal, thank you so much for taking your time out and joining us here on ET Now. And we have seen a lot of volatility of late in the oil market, which is led by global growth concerns and unexpected OPEC Plus output hike. You tell us, you've in fact written in your latest report, you've also stated that India now emerges as a rare source of energy demand optimism. Can you elaborate on this further? Which sectors will lead demand growth in India, and even on the OPEC Plus decision that came overnight?
See, in terms of the global picture, you're right. There has been a lot of volatility, and the oil prices that has taken a bit of a beating in the start of the year. Primarily, that's because we have an environment which is not very not very jovial as regards as oil demand is concerned. And at the same time, supplies are coming in thick and fast. OPEC Plus did two major supply increases this year. And the year has just begun, right? So that's why this picture of imbalance of demand and supply continues, and beyond these core fundamentals, the picture was further clouded by all the tariff talks and trade issues, etc., that start creeping in at the start of the year. So that made the overall picture a bit gloomy for the markets. That's why we've seen a sizable fall for oil prices this year. In terms of India, India remains a good bright spot for oil demand globally. However, I would caution your viewers that India's base is not as large as some of the larger economies of the world, which means that, and in terms of oil demand I'm talking about, which means that while India remains a bright spot, but the overall impact of India in the overall picture remains small, and it doesn't have a outsized impact, and India's demand is perhaps unable to shoulder all the global weaker fundamentals.
India continues to remain a bright spot in the global energy demand landscape. That's the word coming in. But Mr. Agarwal, let's shift our focus to OPEC Plus and the recent outcome. How do you expect OPEC Plus supply factor to play over the short to medium term? And do you expect OPEC Plus to further announce surprise output hike for the rest of this calendar year?
That's a very tricky balancing act that OPEC Plus has on its hands right now, which is, to either look at price or to either look at market share. If they'll start looking at market share, if OPEC Plus start looking at market share, it means that they need to return more oil back to the market, even more than they did in the last, 2 months, where they announced sizable hikes in terms of supplies. If that continues, the fundamentals which are already weak are going to go even weaker. And the counterpoint is that, if they continue to calibrate, which they have been doing, by the way, for a few years now, OPEC Plus, if they calibrate the markets further, to achieve a price, basically, which would which would mean that the output increases would be much more slow, much more careful, and much more calibrated, so to say. So the short answer is that it really is a two scenarioed picture. OPEC Plus in this market fundamentals can't expect to return a large portion of oil to the market, without without perhaps sort of taking the markets lower than what they are right now.
OPEC Plus output hike continues to be the big question now, but let's also talk about the Chinese economy. And the Chinese economy continues to struggle post-COVID. China, because it is the biggest importer of oil, continues to face sluggish demand for oil as well. How big of a concern is weak demand from China, and what impact will weak demand from China have on global oil market?
See, China was always a major factor for the oil market, at least, in the last 20 years. China was about half or thereabout, slightly lower than that, of the global demand growth year after year, in a very relentless manner, right? That's why if you have to understand the temperature of global demand growth, you have to first understand Chinese demand growth. That was conventional wisdom of the oil markets for the last 20 years or so, right? What has started to happen is structurally Chinese demand, oil demand is maturing, which means that, there are some short-term economy issues within China, but, the larger point also is that there is a structural shift in terms of, how China consumes energy and what forms of energy China consumes. And there is certainly more, focus on electrification, more focus on gasification, even in heavy duty vehicles, etc. So some of those things have impacted demand in the last few years, and demand right now for China, there are various views in the market. Some says it's already slightly past the peak, and I'm talking about road fuel transport demand. Some says this year is going to be peaking, some says next year, but the broader point is that it's very near to that. Does it mean that Chinese demand will fall very considerably in the next few years? No, it's going to be plateaued at where it is, for a sizable amount of time before it starts receding. And there are anecdotal evidence from some of the other matured, crude oil buyer or other oil, demand centers in the world are, right. While they're not growing, but they keep on consuming almost similar volumes of petroleum products year after year. So that's with China. Basically, the world right now is not expecting much in terms of demand growth from China.
World is not expecting much demand growth from China. That's the word coming in on the China factor and its impact on the global oil market. But Mr. Agarwal, now that we are in a 90-day pause as far as tariffs are concerned, do you believe the worst of tariff-related uncertainty and its impact on oil market is largely behind us? And perhaps OPEC Plus is the only factor that we need to watch out for in the oil market?
Well, that's very tough to know, right? I mean, we are in a wait and watch and pause mode right now. I'm not an expert in geopolitics to say, but basically, it's a very tricky situation, right? I mean, the sort of proverbial cat is out of the hat now on tariffs, and I mean, what happens after the period of deal making gets over is still to be seen, right? But remember, tariff is something which is a very uncalculable implication for the market, right? I mean, in this modern era of oil markets, we have perhaps never had this kind of a disruption for the market. So it's very difficult for anyone to really pinpoint on the implication if there is a tariff of so and so amount, between two countries. What does it imply for oil demand? Yeah, that's very tough to put a number to, because it's such a complicated phenomena. Perhaps in the short run, might not even have an implication, but certainly in the not longer run, right? So very tough to say that if we are past like the peak tariff in terms of disruptions of the oil market. Perhaps perhaps there is more to come, or perhaps it's died down. Very tough to call right now.
And let's shift focus to a slightly longer term question then, Mr. Agarwal. As we transition from fossil fuel to renewable energy, how do you expect this factor to impact oil demand over the next 8 year time frame?
See, in terms of renewable energy, there is, and I'll now focus mostly on India because the transition journey is very different for different parts of the world. So I'll focus my answer more on India, but I can give you a global answer if you're looking for that too. But in terms of India, basically renewables where they are coming in thick and fast is mostly on the car electric, or rather the electricity side of things, which do not really compete with oil, right? That's not a renewables competing with oil story. There is biofuels coming in, quite thick and fast, and blending mandates in India has been achieved, in a very fast and furious manner for gasoline, for example, over the last few years, which does help a little bit in terms of normalizing, or in terms of leveling off the edges of how much oil demand grows year after year. But essentially, India's overall energy demand growth trajectory is simply too high, right? I mean, India has a favorable demographics. The per capita energy consumption is also going up on top of that, which adds up to a lot in terms of what India needs for cheap, affordable, and reliable energy. Which means that one solution is perhaps never enough, right? I mean, India is, remember, one of the countries which is going, kind of all out on renewables, but also going all out on putting in, new hydrocarbon capabilities wherever it makes sense, right? So it's going to be, it's not going to be either or picture. It's going to be, all of the above, essentially for how, India's energy needs are going to be met.
Mr. Agarwal, thank you so much for taking your time out and joining us here